All right, welcome back, Collins Connection. Back with my boy Jay Smooth, aka
What's
Jay
happening?
Cota.
What's good?
Okay. If you guys didn't catch our episode last week, we talked about bridge loans and buying your your next primary home. Not second. So go check it out. I'll put it up in a link up here. But this
Just
week,
realizing I've got on the same outfit I wore last week when we did this video.
people know we batch this stuff. Man. Who we playing? Who we playing? They know.
Go along with it. You could have gone along with it.
Yeah, they get it. It's the same. I have a
And
thousand black shirts.
that's what I'm saying. That's an easy excuse. You Mark Zuckerberg that.
I
You
know,
just
bro. That's like,
every day seven. But you've got seven of them.
and I do it on purpose because the wall's white behind me. I'm like, all right, I gotta wear black.
Gotta have
But
good contrast.
this week we are going to talk about, since we're formatting our podcast now, is that viral clip. If some of you haven't seen it, post it. I'll put it up here. It was a picture put on a video, excuse me, by a realtor with this open house in I think it was in Santee, but there was 100 something people, maybe even more, lying around the house. It was absolutely ridiculous. And I know I got called by a bunch of people like, "Oh my God, is Santee like coming up like that?" And it's crazy. Like they had to like they had to go in a line, so you follow the person in front of you and tour
Tally
the
number.
house. Unrealistic,
Market's back,
unrealistic.
baby. Let's go.
Yeah, yeah. But a lot of people were afraid, man. They're like, "Oh my God, this is the market. Like, 7% interest rate, and people are lining up around open houses. Like, there's no chance." And I'm like, hold up. You know, the bullshit meter kind of popped off in my head. Like, wait a minute, let me look more in depth in it. And I'll put this up on the screen so everybody can see it. But doing a little bit of due diligence research, and you look at the write up of the home. It was in Santee, and the entire write up. He did the main three, right. First, he listed it for what it was bought for 4 years ago, with no realization or expectation from the sellers to sell at that price. Second, he put in VA, assume the VA loan, which is just a dog whistle for everybody to and basically excuse me, VA assumption at 2.75%. So
Woo.
yeah, right. So
Good
those two
rate.
things blew it up. People like, yay! I can get a house under unrealistically low price and have
Totally
a two. Oh my God! And so naturally, due to false advertising, people showed up from every walk of life to come over there to see this home that was falsified, like wasn't realistic. So I wanted to come on here with a lender to talk about the VA loan assumption and this mythological thing that most people have never done, but everybody hears about, and kind of go into a little bit about it, right? Before we totally shit on it because it's going to be tough. Give you guys a precursor, but first let's talk about what is the VA loan assumption, who can do it. Give us the lender side of it so you can see it
Sure.
from that perspective.
So it's not only VA loans, but there's several loans that can be assumed. But the one you hear the most about is a VA loan. You don't actually even have to be a veteran to be able to assume a loan. However, what it is the current servicer allowing somebody to come in and essentially replace the existing borrower on the mortgage without technically providing you financing for the purchase. It becomes, in a way, think of it more of a transfer than a purchase in the true sense. You're transferring ownership of the home rather than purchasing the home from the other individual. Now, it sounds great in theory, and I can tell you over the last 3 years, especially when rates first jumped up, this became a very hot topic, and everybody wanted to find an assumable home loan because why not? I get it. Who doesn't want those rates from back then? And you don't have to deal with any of the craziness of what it took to buy a home back then. The reality is it's not a short process. You're not guaranteed that it'll be accepted by the servicer. Communication is a difficult thing from what I understand. And again, you can't come to your personal loan officer to do this. You have to work directly with the seller's servicing company. The big piece of it that I don't think many people realize is let's say they bought that home for 500,000. Today's market, it's worth 700,000. You are not assuming any of the growth in the home from when they bought it. You are assuming only the current mortgage as it sits at this time and its balance. Any of the delta between what is owed and what is being sold, you have to pay typically in cash. There's not really second trust deeds. I know there are some products out there that allow you to kind of bridge that, but in the traditional sense, it's not an advantageous way about going about getting a home in theory. That's not even getting into, and I'm sure you can talk about the perspective of a seller and an agent receiving an offer like that, what that looks like. I've got a story I can share with you recently of an offer that was written. We went to write the offer on a home, and then found out in the process of writing up the offer, it had an assumable loan. The veteran on it, or the active duty member, immediately switched gears, and their rate was only 4.5%. Which you can get very close to on a number of different programs, temporary buy downs, what have you, in this kind of market. But he wanted to go forward with the assumption loan, wrote it up, sent it over, and the seller, I prepared the buyer like, hey, more than likely, here's what I think's going to occur. I don't believe that they want to wait 60 to 90 days to find out whether or not this can happen. I believe they'll probably counter you, and the best option to try to win this deal is to write a finance option, negotiate credits to get a rate very similar. We're only a few months removed from 5.5% rates. Hopefully we're going to see something similar or lower in the future, and then get into that type of rate down the road. It's not even a 2.5% rate. Mm-hmm. And that's ultimately what ended up happening. The seller said, no, I don't know when that would go through. I need to sell the property. I'm not going to wait that time frame when I've got other offers that can close in 15, 21, 30 days that have financing in place. And essentially countered back because they did want to help a service member, but gave them the opportunity to accept it with financing.
Which is nice, and that's not what normally happens. It's
not. It's simply, it was a gentleman that, served himself, and wanted to, help if they could, another active duty service member. And there weren't any other offers on this home.
Yeah, and that's the thing.
Like, this is just truly, he didn't even have competing offers, and he still didn't want to accept the assumption.
Yeah,
right?
And I'll try to bring a unique perspective, A, as a service member, and B, as a realtor. So, like, if I'm representing, especially like a military member, and they're selling their home, first realizing that if you let someone that isn't military assume your loan, you're not guaranteed getting your entitlement back. If you're doing it to a civilian, that's a whole lot of risk.
Your entitlement's tied up anyways. I mean, to my understanding, your entitlement does not get replenished because that loan has not been paid.
Quick plug, if you're thinking about buying a home in San Diego and you're a first-time home buyer, or you're relocating here from somewhere else, or maybe you've bought homes here before but you've been out of the game for a little while, check out my free Ultimate Home Buying course. It's a free 5-day course that teaches you everything from choosing the right neighborhood to getting your keys and moving in. And I also arm you with a bunch of tips and tricks that help you compete in America's most competitive housing market. The course has already helped over 30 buyers, and each one of them has told me that it made the process so much simpler for them. So regardless if you're buying the next 3 months or the next 3 years, do yourself a favor and check it out. I'll put the link below in the description.
Only if it's another military member.
Right, correct.
So if I do it to a civilian, my entitlement is still tied up. So that's the first risk. The second one, especially in San Diego, and I can only speak for here, the market moves so fast, and the risks that a seller takes to even go down that road with an assumable loan, your house is going to be on the market for 60 days. And realistically, homes here move a lot faster than that. So why would I take, as a seller, this risk to do that? And then hopefully the buyer has the money to cover the difference, because no one's here doing it for free. They all want their money to be, they want their equity. It's hard to find a situation that it applies to, especially in high cost of living areas like San Diego, because the equity in turn is your enemy, because you have to come up with all that. Second thing I want people to realize is that anytime you see a home listed on MLS, 9 times out of 10, if a realtor is putting VA loan assumption, all it is a dog whistle to get you through the door. They have no intent of going through that. It's just they know that's what you want to hear.
Exactly.
My one experience of assuming, I was about to assume a VA loan. This was like a year or two ago before we bought this place here with Jason. And was this lady? She just picked up my buddy, who's also a realtor and a military guy. He didn't have any more entitlement on his VA loan. Hit me up and said, "Hey Ian, I know you got some money left on your entitlement. This is my client. She just bought the house like 3 months ago, and she picked up chief. So anybody in the Navy knows that it's pretty quick. Once you pick up chief, you have to take orders, and she got orders to go back East Coast. So she didn't really have a lot of equity in it. It wasn't on the market yet, and that's how I almost did it. When I went down the line, it's not quick. When you meet with Jason, you approve, you submit all your documents online. It's very quick. Like, this man will get you all the way, an underwritten pre-approval in 2 or 3 days. This is all snail mail. So I had to reach out, send mail to her her loan provider, and then wait for them to get back. And I told him and her, I was like, listen, I'll buy. It was a nice little condo in the middle. I think it was like Lemon Grove, or I don't know where it was. Like, I'm doing this to help her out because I was just going to rent it for a couple of years and sell it anyways. But I was like, this entire time, continue to look for someone to buy this to make the numbers work, because they didn't have enough equity to pay, the agent and all this kind of stuff. And sure enough, it took so long. The home prices in San Diego increased enough in the 2 months that I was waiting for word back that they were able, the equity in the home increased, that she was able to sell the home, still pay her agent and all that stuff, transfer title and all that, and go through. So the moral of the story is, it doesn't, as much as I would like it to be a normal thing and to help people out, it just doesn't. Like, it's not a real thing. You have 99.9% of people will never do a VA loan assumption, especially in San Diego.
People can't. I mean, I don't personally know of anybody who has, but I'm sure that there are people that have gotten one through. And if it works,
I almost did.
It's just,
it's close.
Yeah. I mean, just know what you're up against in a market. I mean, it's no different than saying, hey, I want to offer 30 grand below ask, and you pay my closing costs and give me credits. Know your market. Like, it's not going to get accepted. Wasted exercise to proceed, with that line of or train of thought in writing that contract.
Yeah, and I don't want to be a doomsday guy. Like, you'll never find it, all that. Like, there's a 0.1%, and I really racked my brain trying to figure out situations that make sense. So like my situation where it was a service member. And they didn't have the home. They had their home under a year, so there wasn't that much equity that I would have to cover. Okay, it makes sense. But I want Jason to go through the money. So let's say hypothetically they find one of those crazy products that will cover the bridge, right? Say it's an $800,000 home in Chula Vista, and they bought it for $400,000, whatever. So they have to bridge that gap of $400,000. What would that look? So they got 2.75 on the $400,000. Now, what about the $400,000 they have to come up with?
Yeah, I mean, it's going to be a second trust deed, right? Because the loan you're assuming is going to hold first position. Most second trust deeds, if you talk about HELOCs, things of that nature, you're running anywhere from 8 to 10%, maybe higher, depending on qualification, even if you can get it. Because again, second trust deeds are more difficult to qualify for. You're also got to take into consideration, on them, depending on how the contract's written, if the realtors are being paid, not just bridging the gap on the delta between the amount owed and what they want to sell it for, but there's still title and escrow fees probably involved in that. Realtor commissions are probably in some way involved in that. I know it's not a traditional sale in the sense, but it's more costly than what people think. Now, hey, if you can find the home that's got a loan of $400,000 and hasn't appreciated, then that's a different story. And maybe if somebody got a loan in the past 2 years, like right before rates ticked up, like this gentleman at 4.5, he didn't have that much more on the value that as what he did on the loan, but nonetheless, I think it was like $30,000. You could do a VA loan and have no money down, or pay $30,000. Well, what's the difference between that $30,000 stretched out over a couple years before you might have a chance to refinance versus $30,000 divided by 24 months? And what's that difference? Did you really save money? Because otherwise you wouldn't have put down any money on that property if you were using traditional VA financing.
Yeah, you could have bought a rate buy. You could do whatever you want.
It's the same as when people bought at 3% rates. I mean, everybody thought they got a great deal, but when you were paying $150,000 more for a home out of pocket, did you really get a great deal? Because you were paying more than what the home was worth, and that money that you put to bridge the gap from the value and the contract price, that's got a value to it.
Called break even. When is the break even cost going to be?
Yeah, and in some cases, you're better off taking a 6.5% rate.
Yeah, and that was the other thing too. Is like I'll say it all the time. Like I only know San Diego, but if someone was to be able to do it, right, it's usually like a family member. But even then, I would argue, why don't you just get into a living trust? But essentially, if you're in a slower market and there's not homes don't appreciate very fast, and I don't know. I think the criteria would be not a lot of appreciation on the home. The market around you moves slow, so 60-day plus, because it takes a while to do these VA loan assumptions. And you found it on your own, like a for sale by owner type. Those are going to be the three criteria. If you found it on Zillow, if it's in San Diego or a metropolitan area that's desirable, 99% of the time you're getting played. Like it's not it's
needle in the haystack. It's a unicorn.
Yeah, it's not you'll never do it. It's just a marketing tactic to get in.
It's it's a romantic thought.
Romantic thought. And I get it, because interest rates are high. What's my interest rate now? 5.6. I don't know, whatever my interest rate is now, 6 point whatever. When you're buying a home and it's 7%, it's scary. But don't just look at the interest rate and try to fall trapped to this, unrealistic, because kind of like we talked about before in our other ones, you go find Navy Federal that'll offer you 0.25% less, but they also close in 45 days, and they don't do cross qualification. You'll never get to be able to use that 0.25%.
Home, what good is the rate?
Exactly.
With my mentor, when I got into this industry 23 years ago, he always told us, rate is what you pay, value is what you get.
Exactly. 100%.
The rate's only what you're paying. What was the value of the investment? Because that's more important than the rate. The rate's going to change, refinance opportunities, etc.
Exactly.
So
if from a lending perspective, if someone, they have this romantic ideology or whatever, a romantic dream of potentially getting a VA assumption loan, what do you recommend? I would recommend them to also get pre-approved, so they know, because otherwise you're going to be waiting months.
Yeah, I mean, if you're looking to write an offer using an assumption, one, I'd make sure you have your finances in place. Because to my understanding, you can put it in the remarks, but you can't filter an MLS search for assumptions, can you?
Mm-mm. I mean, you do keywords,
but it's in the remarks.
Yeah.
Right. So it's very difficult for your realtor to find you homes that are assumable homes. It's not as easy, and you're making a small pool in a market like San Diego even smaller. But have your financing in order. If you really want to go down that road, then make sure your real estate professional is at least having the conversation with the seller or the seller's agent of, hey, listen, we'd like to go this road. If it's not acceptable to your seller, here is our backup offer in financing. Have it in place, so it's just not a no when you're declined, and then you're kind of stuck with them not knowing that, listen, we can get financing, we prefer to go this route. If that doesn't work for you, we understand. Let's shift gears and go with traditional financing to purchase the home. At least have a plan B if it's really about the home. Because if you're buying a home only solely for the rate, are you sure it's the right property? because don't buy it because it's got a 2% rate attached to it and it's not what you want in a property. Not that any home is going to be your dream home. I mean, a starter home is a starter home for a reason. Get something as opposed to have nothing. But don't buy it based upon the fact of an assumable loan.
Yeah. So, in conclusion, per the man, the myth, the legend, if you do want to entertain this unrealistic idea, make sure you get your financing in order, because you're gonna have to do it anyways. If for whatever reason the seller says yes, I'm willing to do a VA assumption, trust me, all those documentation that you're gonna have to do with Jason and all the stuff you have to submit through snail mail, that bank's gonna make you do it anyways and put it in the mail. So might as well knock two birds with one stone and just get pre-approved first. You're gonna have the whole documentation.
Just have the options to know, like, what is this versus that? Because again, there are many ways in this market and tools you can use, whether structuring a loan, negotiating seller concessions, where you can get a rate or payment very close to that for the time being until the market does cool a bit and we see rates come down and ease off.
Exactly. And then that's what I'm saying. So they go, and a lot of people that just go, shoot, throw spaghetti against the wall, see what sticks, they don't know they're going to get pre-approved for it anyways. So when you go and sit down with you and I give you all my financial documents and you can see if I'm pre-approved or not already. So step one, sit down with Jason and get your stuff squared away. So at least you know what you're pre-approved for. Then if you want to entertain the crazy idea of doing a VA assumption and you're in one of those, third world states, like, Nebraska, Jason, defend your Nebraska realtor, whatever.
Indiana, man.
Third world state of Indiana, and home prices are a 6-pack and a handshake, then you can go down that route, but at least you'll already have pre-approval ready and you'll be ready to go down the finance route so you don't miss out on the home that you like. Second, make sure you hire a realtor that communicates, because I will tell you from the real estate side, getting a listing agent on the phone to communicate like, hey, this is the way we're submitting our offer, but we're also ready and willing, here's my lender, Jason, to also go the finance route. It is a salesmanship or skill set to be able to articulate your plan. That way that realtor, because remember it's telephone, they have to go articulate to the seller. So hire somebody good, make sure you plan it out, get all your financing in order. And always, if you want to book a meeting with Jason, check the link below. It has his whole little cute little clickable link. I also, if you haven't seen before, my little plug in the middle of the video, my home buying course is here. It's free. You can see it. You can learn about buying a home in San Diego, and it will apply to every other market. It's the strategy and how to get through it. It's 5 days. You get all of it for free. And then, unless you have something further to add or anything in the bullets in the chamber.
Same thing as I'd close everything with. Make sure you're being educated on your options. It's too important of an investment to not know what all options are, even if it's to confirm the one option is the best. Know what options you have. Get educated on things. Don't be sold on things to where after the fact you say, I wish I would have known, or had I known. Make sure you're working with people and professionals that are gonna have your best interest in mind, and make sure you're fully comfortable and confident with the decision you make moving forward.
Spend at least as much, if not more, amount of time you do researching your next car purchase as you do purchasing the largest investment of your life.
Probably a good idea.
All right, brother. I appreciate you, man. We will be on this next week as well.
Yes, with a different shirt.
All right.